There we go. All right.
All right.
Back with another one.
So we agreed with STFU. That's what
Yep,
it
yep.
is.
Yeah, we're
It's
we're
not.
going we're going with the STFU podcast, Stock Trading Finance Unks. I think it's about the most honest representation of who we are. We don't, if you've been listening for an extended period of time, or even like one or two episodes, you realize we put on zero airs. We completely admit that, we're just dudes discussing what we've observed. We have specific backgrounds that lend well to understanding the geopolitical situation, and we're just honest. Give our honest takes. That's pretty much it.
Also, sort of poking fun at our age
Yeah.
because now we're in our 40s.
Yeah, I
So,
guess
uh,
men in our
but
40s are considered unks.
yeah.
Although I do think now 40 is the new 20 because I say so, because I say it
Okay.
is.
But with that said, Danny, even though we don't put, we don't necessarily put ourselves on pedestals or like elite traders or anything like that.
If we do, we're
Uh,
overtly joking about it.
Right. But with that said, I've noticed that with the picks that we've been going over in particular today, specifically, as this slide will point out, um, I've noticed more and more hedge funds and wealth management and so forth, they're piling into our picks. They're
Yeah,
just,
I
every
think that
day I look at it and there's a new news article that says, yeah, we're, this much, bought 50,000 shares or 5 million worth of X or
sure.
it's been substantial.
And
Yeah.
what we're not saying is that they're sitting here following us in every move that we do. I just
No.
think that we're not the only ones with these observations, right? There is this fundamental glaring arbitrage, as I would say. Our arbitrage is not just looking at currency pairs and stuff like that. An arbitrage is a basically an inefficiency in the market that you can exploit. And the
Right.
inefficiency thus far has been the talking heads and Trump jawboning down, say oil, for example, among other things, creating a
Mm-hmm.
nice wide opportunity for us to not only get in but add to positions. And as we're going to discuss here, if you haven't gotten in or you're only able to salt away, a couple $100 here and there, you're still early, and we're going to discuss why. So
Right.
lends really
And
well
we've
to this
been,
one right here.
yeah, and we've been really early, like
Yes,
4 or 5 months early, it turns
sure.
out, which is par for the course, really. Kind of used to that by now. I was screaming at the top of my lungs during the COVID situation, and nobody listened, and whatever. And then
Likewise.
all of a sudden, lockdowns.
Yeah,
4 months
likewise.
later.
Yep.
So yeah. So, but the what we're starting to notice now is all the sort of and it's interesting if you look at it in a thermodynamic sense because in order to really have tech gains you need the cheap and abundant energy.
That's
And
right.
the real arbitrage that I've seen for a while, a
Especially with
structural
AI. I
arbitrage.
don't mean to speak over you, but especially
Yeah,
with AI, because what's carrying the tech bubble right now is obviously AI, right?
right.
Now, granted, we've discussed that that's not necessarily a good thing. In fact, it's arguably a very bad thing. But to your point about tech in particular being a particularly energy hungry, it's a great example of that.
Right. So as that sort of and most of what you've seen going into Nvidia and sort of trying to front run the AI trade through semiconductors, well, you can have all the semiconductors in the world. If you don't have the energy to power them, they're just really expensive paperweights.
Right.
You know
Yeah.
what I mean?
Sure.
But the entire time we've been looking at energy, and not only have we seen this sort of blow off top in like in tech generally, but semiconductors, and even if it's gone to capacitors and so forth now, uh, where and the Hormuz closure at the same time, and it's like, whoa, nobody's picking up on the only energy that we really have inside the United States, or let's say North America as a whole. So that's why we've been looking at that sector primarily and trying to figure out the best places to park cash ahead of that tidal wave that undoubtedly has to come in if you're ever going to do anything with AI anyway. Not just that, but we have a structural deficit due to the Hormuz closure. right? So, like I said, it literally it like has to be only a matter of time until those movements are made.
Sure.
Luckily, we've been able to get in at some really, really, really dirt cheap prices at some really solid valuations. Like I've been able to, it's hard to believe that like a company like CVE and what they do, you can buy their stock for like 27.50, $28. Like that's like a tier one asset.
Mhm.
You know what I mean?
Yeah, and so
So
to your point, I think that this is best exemplified here by the XLE XLK ratio. So here we're looking at XLK. Let's take a look at XLE, how we have the energy sector, which, and again, this is why we're still early because these things haven't necessarily even been priced in yet. We're still jawboning stuff. This is a nice little sideways correction here. If we switch over to XLK, as we had
yep.
before. You see it.
See the compression there. You can see where the buyers and sellers in the signal are just sort of chopping, and that spring is coiling,
Yes,
right?
correct, correct.
For the
And this
undoubted,
was
in my opinion, the breakout has to happen upwards,
correct.
right?
And if you remember from, I've mentioned this multiple times, when you see a consolidation of volatility, look, we spanned from, okay, 63 down to 53, that's $10. Now we have, over here, let's use this as an example, 55 to 61. Okay, we're narrowing a little bit, $6-ish dollars. Now here we're even more narrow, 55 to 59, for even less here, like $3-ish dollars. So what that means is that volatility is constricting, exactly like you mentioned, just like a spring. It's being compressed down, and that spring is going to just release at any moment.
Mm-hmm.
In our opinion, this is going to be a breakout rather than a breakdown. It could go either way, technically, but based on the geopolitical situation, we're likely to see a breakout, breaking through highs here at 63.20. 63.26. If we go back to XLK, yeah, we see a nosedive here. Technology sector.
Mm-hmm. And that happened what last week? When did that
Uh,
high hit?
so so the high hit on June 3rd. So that would be
Mm-hmm.
what, 6 days ago? We're sorry, 7 days ago. We're the 10th right now. So exactly a week ago.
Mm-hmm.
Yep.
Yep. And
Yep.
what we're seeing here, though, what I think what you're starting to see in the play that I see coming is, and it did start just today, is people massively overweight text, even pension funds, hedge funds, where the tech is dropping. They're having to sell that tech, and they're moving. They're not even going into cash. They're directly swing trading from tech to energy
To
equities.
and that is a very realistic thing to do. That happens in the markets all the time. When this is even just a historical thing. Just certain times of the year, certain sectors are more viable than others, or economic conditions. And what happens is portfolio managers won't even sell directly, and hold cash or put it in money markets. They'll just swap directly from one to the other. So
Mm-hmm.
to your point about the stock market peaking, sorry, the XLK kind of peaking around June 3rd. Let's just for fun look at when the S&P peaked over here just a day before that, and we're looking at this sustained sell-off that happened at roughly the same time, and that should be telling you something. And what that's telling you is that the markets are overly overly weighted in tech, specifically AI stuff.
Right. Yep.
So, implied volatility skew, the gamma fuse is lit. What's going on here?
Okay. So basically, I guess we would be. I guess we would be the sophisticated retail traders because we saw this several months ago.
Correct.
But essentially, the people are buying call options to outbid and
Exactly.
front run the July 9th SPR deadline, which is
Mhm.
when basically legally they can't draw any more from the SPR. And even engineering wise, they can't. If they do it any further, the whole thing's just going to collapse.
Mhm.
They're going to have to like find some structural way to hold it together or something to get any more out, whether they pump high pressure air or seawater or something. They're going to have to figure something out in order to get any more out. But that deadline is a hard deadline, right? So what they're doing is they're bidding up the call options to basically drop out all the puts that are
Hmm.
put on the futures contract for all of those equities under that umbrella. So it's already started.
Right.
Yeah.
All right. WCS to WTI spread.
Now, WCS is Western Canadian Select, and that's basically Canadian oil, comes from Alberta.
Right.
WTI, you usually hear about Brent to WTI, right? Well, so Brent is more expensive than WTI generally. Brent is what's traded internationally into the Asian markets and so forth. WTI is West Texas Intermediate,
Hmm.
obviously, largely came from Texas. Uh, and what we've seen with WTI, even though WTI has gone up, right, to catch up to Brent recently, we're seeing that
WCS has been lagging.
it has, but recently it's starting to bid up towards the WTI.
So
It's starting
so the spread's
it's
narrowing is what you're
starting to
saying.
close.
Yeah.
Exactly.
Uh-huh.
It's usually at a massive discount. It recently started to close that discount window.
Correct. And this is going to lead straight into our picks. Actually, as you correctly identified here, CNQ and CVE. Let's go ahead and actually discuss those real quick. CVE. Let's start with that. Synovus. Um, CVE is that? Yep. So, um, so we are at highs. We haven't. What's in? What I'd like to call out is okay. This hasn't broken out yet,
Nope.
which means that again we are early to collectively. If you have either bought maybe a couple shares, but you don't have a lot to really stock up on, you do have time. Notice that this did not correct anywhere near. For example, look at the drasticness of this correction versus this right here. So what we're saying has not been priced in yet, in other words. So really
Mm-hmm.
good opportunity to get in. Notice that this is kind of looks a little bit like a head and shoulders pattern, which is actually a bearish sign technically, which would be great for us if we did see a breakdown because if I do inverse Fibonacci's on this to see where it might fall to. Look at how well that these two align. Within a dollar here, basically 36, 35. That would be a great point to enter if this thing does break down, because of course that would just be a technical retracement.
Well, yeah, but Danny, even then, I don't. Here's the thing: is personally, this is my view. I don't. I can't see that happening. It's plausible, but I just the reason why is because Hormuz is still closed.
I
So
completely agree, and I'm certainly not
refiners
arguing.
in the Gulf, yeah, refiners in the Gulf of Mexico need that West Tech or West Canadian Select to keep their refining operations, just
Correct.
to keep a
Yep.
business running,
Yep.
right? So
Correct.
it's like they're
Yeah.
gonna
No.
have customers. Yeah, yeah,
I'm
yeah.
certainly not disagreeing with you. I'm just saying, purely technically speaking, not knowing that, we
Mm-hmm.
could see a little bit lower prices here, just technically. And if you
Oh, that would
do,
be great. Yeah,
that,
that would be
that's
fantastic.
my point.
Yeah.
Is that if you do consider this on discount, because current levels look pretty darn good, especially considering what we said about the WCS WTI spread. Moving on to CNQ. Believe this one we thought we discussed this before. Maybe not.
No,
Uh,
I, I think we did. Pretty sure.
yeah, I'm just wondering why I don't see any analysis
Markers
here.
on it. Yeah.
Yeah, exactly. So again, this is another one in a nice sideways correction. Volatility is somewhat constricting, pushing in that spring, looking for a breakout. Good prices to buy. Looking at the Fibonacci's, 59, 58 would be a bargain. Because as we mentioned, the closer and closer we get to that July date, that's kind of, basically becomes more and more imminent. So
Right.
64.42 is roughly current prices. 63.53, roughly the same. So anywhere in there where you could get, even if you enter even at current prices, to me, this one, if you have to hold it a couple bucks under, that's okay. 59.58 would probably be a floor for where I would expect this to go before it breaks out. Wouldn't you agree?
Yeah. Now, the only issue that I'm having with these, I have my limit orders in for potential sells. I'm
Sure.
for CNQ. What I'm looking at is with things like CPE, CNQ, and Suncor generally, but more CVE and CNQ is uh, part of the problem is if North America is permanently restructuring and rewiring its sort of energy infrastructure, because as I've said before, the United States isn't going to be allowed in the Middle East in the future. Like that's
I,
not we're not
I don't.
welcome there.
We're either
So
not going to be allowed, or our infrastructure is just going to be destroyed. So it's like
yeah, right,
you really can't
right,
do much anyway. I think that we burned
yeah.
all the bridges with all the other Gulf countries, not to mention the situation with Iran. So it's like there's not a lot you could do. Yeah.
Exactly. But with that said, my only thing is I have like CNQ. I've projected up through July that just based on the mechanics of the situation and the lack of crude that's available, that these are roughly going to increase. CVE, I have about 35%
Hmm.
between now and now. Again, these are just my individual forecasts, but the models that I've been running is CVE goes up about 35%, CNQ goes up at least 25%. The
So
problem is, even if they go up that high, is their dividends are so good
right.
and they're so cash flow positive. I don't even know if I ever want to sell them, even if
Correct.
they,
Correct.
so
This is
I'm
something.
thinking maybe I'll only sell them if they go up like they're
Th
overpriced at like
Right,
50%
correct.
or
This to me
60%
is
or
like
something.
if you guys remember my bragging rights on Exxon, how I got that at an insanely low price, is $32 or whatever during COVID. I see this as like an Exxon moment that we all could have, right? And by the way,
Mm-hmm.
I figured out why the charts weren't pulling up is because these are Canadian companies, so they trade on NYSE and TXX, TSX. I was pulling up the TSX version.
Mm-hmm.
Sorry, guys. If you look at them, this is the NYSE version, CVE, Synovus. You can see I actually did buy into this at 27.56. We're just above that. Again, slight consolidation, actually a fairly significant consolidation if you ask me. Looking to break out at any moment, and as well as CNQ just above my buying price. I'm happy with that because we have great support here at 45.08. It's another one, if you look at the KMI here, this is showing gradual, a nice, healthy, bullish, sustained buying, whereas we have this here, this kind of sideways corrective phase here. And what that means is that's what we call a divergence. So when your buying indicators are saying something and the price isn't doing that, that's what we call a divergence, and it's a strong indication that the price will eventually, if your indicator's good enough, is going to go that way. So again, we see this bullishness here, kind of sideways, ambivalence here, which is portending a breakout. That's just a technical. I don't know anything about this. This is just a technical commentary, let alone what we know and what we've been discussing here for weeks. So, just wanted to clarify that again. Sorry, I pulled up the TSX versions of these rather than the NYSE, which we have covered here,
Mm-hmm.
as you can see here with my entries.
Yeah.
So Devin, that's another favorite of the show. I should have that here if I can't find it. Devin, as you see here, favorite of the show. You have
Yeah,
the
I got in more at Devon last week, I think. Or
good,
this week,
good.
earlier this week. Yeah.
It is on my list. I'm kind of doing this in phases, setting aside from every paycheck. And yeah, so again, you're still early
Same
on this
pattern.
one. Same pattern.
Okay.
I really don't know what else to say here because it's really the same analysis. Constricting volatility, looking to break out. Nice sustained buying here in the Kovac OBV, which is this blue line. Going to PR. Okay, that was PBR. Yeah, Permian Resources. We already have that. As you can see, I'm underwater on this one, which I'm okay with.
Mm-hmm.
In fact, if I
Just
was
wait
paying,
till July. Way too
Correct.
exotic.
Yeah, yeah.
Yes.
That's why I'm not worried. If I was paying attention, I probably would have put another limit order here at 1872. Again, just to highlight the fact that you don't need a lot of money to have skin in the game in this, right? So if you have
Mm-hmm.
18 bucks, if you have $19, right, you could. Sorry, if you have. Let's just be honest and say 20. I could realistically purchase this stock, at least one share. Well, it's one that you didn't
Mm-hmm.
have before. And that is how
Right.
fortunes are made, my friends. Yeah, you just keep adding, keep accumulating. And if you have 20 bucks here and you're, let's say you're just entering the workforce, you have a long time to accumulate and it does add up, trust me. So,
Mm-hmm.
message of hope from an otherwise pessimistic duo.
Cynical old
Yeah,
man. Yep.
cynical duo. So yeah, PR is looking great right now. And again, based on our analysis, there's no reason why this shouldn't break out hard soon. Moving on to Matador, that's another favorite of the show. MTDR, right? Matador. This is one that I don't think I've entered yet, but we have great.
Mm-hmm.
We have our profit analysis here. As we saw, we did see a little retracement, but as I predicted here, 5240 held as a lower bound. Again, the Fibonacci's
Yep.
work quite magically for that. Same analysis. I don't need to repeat it. Nice setup here. So what we're seeing, Zach, and this is pretty cool, is that all of our stocks are really giving us an in. They're like, hey, buy more of me, buy more of me, and
Mm-hmm.
that is
Yep.
something I am not ungrateful for. Finally, we have CRGY. Again, looks like another favorite of the show. We are a bit underwater on this,
Ah,
but
this hold on though. This one, just wait. This man today I looked at all their fundamentals. I looked at like even geographically, like how many barrels of output, what they own, their logistics. I looked at every detail of this company, and Danny, I'm telling you, like this right now, I bought a bunch of because it's only like today it's like $11 and
yes.
60 cents or something
So
like that.
as we speak, I'm making a note to buy more of this like immediately, like as soon as we're done with this podcast, because
Yeah.
this and we mentioned this concept before, the concept of averaging down. As you see here, I just got a shitty price. I bought it highs because my dick got really hard over this, not realizing that yeah, we have time. And so we did see an inevitable retracement. Good support though at the Fibonacci. So this isn't going
Mm-hmm.
anywhere. It's a natural market cycle. So what and I'm a big fan, and I mentioned this before, is buying on dips. If you believe in something and you want to accumulate it, what do? You wait for a dip because a dip is a discount, right? That's like, do you go and buy clothes, in the height of the season, or do you wait until they go on sale? I'm a big sale guy, right? I'm a big liquidation guy, Ross, TJ Maxx, that sort of thing. Sorry, I'm old, so I'm frugal, right? So just the same concept applies. If there's something you believe in, as you saw here, I got a little too little too much of a hard on for this stock. Missed a good opportunity, but that doesn't mean that I can stop there and I can add more here, thus bringing the average price down quite a bit.
Yeah, I what I did with Crescent Energy too was I sold off like a bunch of like other stuff that I just didn't want anymore, and I piled it right in at around $11 something into Crescent when I did the analysis. And
Mm-hmm.
here's why. If you want to go back to the main slide with the stock
Yep.
picks on it, okay. So CVE, CNQ, and DVN. What we're probably going to see with these, we're going to see these likely get bid up starting tomorrow, all throughout the week. We're likely going to see because of that. Remember that swing trade from tech into energy.
Mm-hmm.
When you do it at scale, you can't go into things like PR, Matador, and Crescent Energies. Okay, so what we're probably going to see is with that big money swing into energy equities, domestic energy equities, is then we're going to see these climb up. Now, what I expect to happen is when I ran all these scenarios, is these are going to climb up gradually and conservatively, right? However, then what's going to happen? They're going to start to get crowded. Then they're going to start to go into smaller Permian players like PR, Matador, so on and so forth. Then once it's watch, Danny, watch. As soon as this happens, we're going to start to see headlines about the July 9th stop of the SPR, how tank bottoms are all this. We're going to see like a whole bunch of noise about tank bottoms and this and that and the other. And then what's going to happen is retail traders are likely going to pile into all of these around that time period.
Correct.
Right?
Right,
And
because
that's really right.
typically the institutional moves are made first, and retail traders kind of pile in, often as exit
Right.
liquidity. But I think that in this case, we have a we'll have sustained buying for the foreseeable future, really.
Right. So what I expect to happen is right now, like Crescent is only at like, $11 and some cents. But because of that, I would expect then as soon as just like you were around during the early crypto days and meme
Absolutely.
stocks and all that stuff, what happens, man? They just
Pump
flood
and
into
dump.
those markets and
Pump
they
and dump.
buy up whatever they can, right?
Yeah.
And unfortunate, look, I would hate for like, and look, Crescent Energies, like I'm a buyer here at current prices,
Hmm.
but if it bids up, 80, 90%, yeah, I'm probably going to be a seller. You know what I mean?
Well, sure,
Like,
and you always want to take profits because
right.
you don't know, even though these things have great fundamental
Businesses.
appeal,
Yeah.
and they're great businesses. You can't stop the fuckery, right?
Right.
So you will
Exactly.
have institutions using these as pump and dump vehicles. I mean, basically trying to pull a GameStop. If they see
Yeah.
they just see it, it's like a template. They just see a host to do that, and they're going to do that. So that's why, yes, if we're seeing gains of 80, 90%, that is unphysical. In these cases, it's warranted just because of the situation of what's going on. However, you're going to see institutions doing institution things, right? And so that
Right.
means you need to be on top of that. And we'll be setting targets. I'll be following this with analysis and telling you exactly where I'm getting out. Again,
Mm-hmm.
I don't like to give advice per se. I tell you what I'm doing. And if you want to do
Mm-hmm.
that, that's your own fault.
Or you can learn from whatever we're doing and maybe
Learn
apply
from
it
my
somewhere else.
mistakes.
Yeah.
I wish I had two unks to listen to as I failed my way up through my investing life. I wish I had that. I didn't. I had to figure this out all on my own. So if you're following along and you are just kind of watching, sure, watch my mistakes and hopefully you do better.
But what I really, so yeah, I do have limit orders in where, say these 2x or whatever, like it just automatically that rips and I'm out. You know what I mean? I
Yep.
already have that in. So I'm like, even if I take a vacation or don't look at things, I have tapered limit orders in on the way up too, where I get out as it, you know what I mean?
Sure,
So,
sure, sure.
but
Yeah.
here's my
Uh,
thought, Danny, since
we
I'm
call
already
that a
getting them
bracket
at
order,
low
by the way.
prices and it is US energy infrastructure, like I'm not selling all of everything because these are cash flow positive businesses. I'm holding on at these low prices. I'm probably going to hold on to a share or two of like all of them. You know what I mean? Like,
And that's a
yeah.
perfectly realistic strategy. We call that letting a soldier ride, right? So
Mm-hmm.
if let's say I have 10 shares of a stock, it hits my profit target, I might sell 8 or 9 of them and let the other two just do whatever they do.
Just do whatever they do. Yeah.
Yeah.
Yeah. So those are all my picks right
Great.
there. The only other pick I really have in my whatever strategy is RCAT because that's a long term bet on U.S. U.S. drone like modular drone production
Well,
because we actually don't have that inside the United States.
correct.
So that's the only
Correct.
publicly traded company I could find there that doesn't make super expensive billion
Right,
dollar
we're talking like
over.
it's not the
Right.
Lockheeds, not the Raytheons,
No, these are
and
like
it's also
what
not
Ukraine makes and stuff. Yeah, these
multiple
are like
it's also not
right,
not integer hundreds of dollars a share either. $10, this is a great steal. And
right.
as you can see, we are in an extended sideways correction here. With the roughly the bounds here at 896 and 17. That's quite a large range. So if you were interested in getting into this, 1069 is a really good price. I would suggest as the lowest this is going to go probably is 896 based on the Fibonacci's and his previous behavior here. So this is a good something to keep an eye on for sure. Yeah, so I guess that's it for our selections. Just to kind of review some of the ones that we've looked at. If you remember, we did quite a bit of an expository on PBR, Petrobras. This has been a longtime favorite of mine for quite some time, by the way. It's like a flagship Brazilian company. I believe it's the biggest company in Brazil. I'll have to fact check that. But it's a longtime favorite of mine. Got in right around here, kind of at break even, and this is a good thing, right? To me, this looks wonderful. Why? Because I see that spring being compressed, right? So this
Right,
looks
not
like,
just that, but their cost of production, Danny, is like $15
correct,
a
yeah, yeah,
barrel.
and that's
It's
one of
like
the.
ridiculously low. I mean, they're so productive. It's insane.
Yep.
It's absolutely absurd. So,
Suncor basically breaking even. Again, I'm not
mhm.
worried. I love this chart. Coiling spring, we need a special acronym for that because we keep seeing this pattern over and over. CVE, C and Q we've discussed. Another favorite, Altria Group, a favorite of the show. I'm in the money here. I suspect this may wiggle waggle a little bit and sideways correct before like a big breakout. So I'm not really getting too excited over this, but in the money so far. So most of these picks, we're either in the money or basically breaking even. EPD, another favorite of the show, big dividend stock, in the money there. VLO, I did not get into this just because I'm waiting. This to me looks overbought, in need of a technical retracement before I consider it, especially because it's in the $200 range here.
First stock I bought in February.
So you were way early.
Yeah.
So VG Venture
I'm thinking of
Global.
getting out at 280 something though.
I think that
You
that's
know.
a great idea. I mean, at 280, how much profit would you have made even on one share, right? So
Right.
280 is the target here. Again, just I missed the boat on this one, but if you're already in, 280 is a great price. And guess what? You could just recycle more of that into what was it, CRGY or one of our
Yeah.
other picks here that provide amazing dividends. So yeah, I guess that's pretty much it for the
Yeah,
show for
yeah,
today.
that's another thing. Crescent Energy, not only do they free cash flow everything, they've got like a 4 to 6% dividend, or like they've got a
Correct,
big
correct.
dividend on the front end. So
If
it's like,
you are new to the show, one of our principles is if we're going to invest in something and hold it long term, it better pay a dividend at least.
mhm.
And bonus points if it pays above 2%, with particular eyes on if it pays above 5%, which is what I call a dividend king. So yeah, that's about it for
Well,
today.
one more thing with my overall macro strategy, Danny. Since the way I see it is the government, the Fed, they're gonna let there's all this stuff like, oh, they're gonna hike interest rates or whatever. That would surprise the hell out of me, to be honest. Uh, but look, whether they do initially and then there's some crash or whatever, you know what I mean? Like, first of all, there would, if they did raise interest rates, wouldn't that cause like a sovereign debt collapse? Because the government couldn't pay
Oh,
its debt back.
well, we're almost
So,
at that point right now where the interest payments on debt equals
right,
GDP, right? So
you
they're
raise
in a
interest
real.
rates, and there's a doom loop right there. So
Correct,
the
correct.
government's
And
insolvent.
this has
So,
historically happened before to other nations, right? This is not
yeah,
out of just because we're the US doesn't mean that we're in any way excused from the physics, if you will, of these market conditions. They're just solid. So yeah, it's quite a conundrum. Stagflation in general is a conundrum because your typical tools of the trade with rate hikes, quantitative easing, and that sort of thing just can't get you out of that, especially when we have such hard limitations on actual physical things. Because again, you can't
mm-hmm.
rate hike your way out of hydrocarbon shortages. It's just
Right.
not a thing, right? So it'll be interesting to see how they address this for sure.
But not just that, but my overall macro strategy here is, since we have that hard date of July 9th, I see some panic happening in the markets, therefore buying up energy equities. Then retail's going to flood in with the big money. And part of the problem when you look at the tech sector
Correct.
versus energy, like the capex on tech is so high that just a small amount of that money moving into energy is going to massively increase the stock valuations. You know
Right.
what I mean?
Oh yeah, yeah,
So, but
just the capital, the cap of the stock themselves versus the
right,
money that's going to come in. We're gonna see some action there for sure.
right now, not with that said, what I'm thinking about is taking profits and then instead of just staying, like trimming the fat, so to speak, in the energy equities, and then just siphoning that right back into, uh, you know, uh, the the infrastructure pipeline tolling
Yeah. So
companies,
so one
because that's the best
the
like
correct.
inflation hedge you can basically have. You know
Yeah,
what I
and
mean?
and that
Like
is actually a traditional that's not like a
new,
yeah,
right?
it's not a new thing, right?
Yeah.
In fact, when the playbook, if you will, for portfolio management when we get into recessionary territory, if that's a word, is just that, right? It's
Right.
it's infrastructure, durable goods, construction, and a couple other things. So
Pipelines. Yeah.
pipelines exactly, but that falls
Yeah.
in that category. So yes, that is absolutely a strategy and something you want to be thinking about, because remember when I talked about construction of risk neutral portfolios, you want to construct a portfolio where kind of the risks of one thing balance out the risks in another. That's number
Right.
one. Number two, you want to be able to, again, this falls into that fourth category of risk management, which is trade management, right? So as you're watching the markets change, you adapt your portfolio accordingly. That's a component of risk
Mm-hmm.
management that a lot of people forget, right? They just kind of set it and forget it. You don't have to do that and just sit there passively watching your assets go down, even if they are good picks, just because the market conditions aren't in your favor for this 6 months or whatever, right? You're perfectly at liberty to kind of slosh those values around. That's what the big boys do. That's what asset managers do. That's what the hedge funds do. Why can't you do it, right? And that's exactly what you're going to want to do.
Right. Yeah, and I don't, Danny. I'm telling you, like, I actually feel really bad for like the pension fund people and the passive investor people. Like, man, especially with all these IPOs coming up, they are going to get hammered.
Well,
You know
so
what I
I'm
mean? Like, they are
actually
going to get hammered.
I have been warning, and if I haven't been clear enough about that, let me be explicitly crystal clear about all these IPOs coming up. Elon Musk wants to be the first trillionaire. So what is he going to do? It's actually so patently obvious to me, and I don't understand why this hasn't gone mainstream, is that he's going to use this IPO as exit liquidity. If I'm right,
Mm-hmm.
that means that SpaceX IPO is just going to tank like an anvil, like Acme
Yep.
Anvil, and Wile E. Coyote is the retail investors. Dong,
Yep.
and they're going to get hammered by that. And I feel
And
I
to be fair to Musk, oddly enough, uh, yes, that's true. However, especially the muskrats and so forth, right? We know this, Danny. He has a long habit of privatizing all the gains and then socializing the
socializing the
losses.
losses. Yeah,
He,
yeah, we
he's
see
he
that
just
time
his
and
whole
again.
career he's
Yep,
done that. You
yep,
know what
yep,
I mean?
time and again,
So
exactly. So,
again, this wouldn't be the first time he's done it. So
nope.
it's just unfortunate that so many people are going to get hurt, but
Yeah.
that's how it is.
But hey, just do what you can to prepare and watch out for those IPOs. Be very, very careful of any IPO, not just this one. Especially just like why, like especially with our analysis and the deep reasons. Like we have talked until we're blue in the face about why our selections are just
What they
almost
are, right?
almost what they are and almost physically impossible to fail.
Right.
You never want to say that, but you get what I mean. Just there's so much in favor of them. Just why would you bother?
Yeah. Doesn't make any
IPOs
sense.
are always rolling dice. And what you have to understand about IPOs is it's not just about the company. Oh, it's a good company. Let me ape in. No, there's so many factors. Like a lot of times, the issuing company is usually some financial firm, and they might be doing some fuckery. Even if they're not, you have to trust their valuation. If they come out way different than what the market's price it in at, you'll see that correction there. Again, you see institutions playing these things. So just a lot of factors in IPOs that really make them rolling dice, as I like to say. And I just think that we're better than that. We have better information than that. So just avoid it.
Yeah, yeah, it's an unforced risk. So
Absolutely, absolutely.
why bother? But with that said, like I said, that joke that I came up with you, like and this is real because I'm big now into permaculture design and organizing all of that. I would rather get a bag of crap in the mail than honestly have SpaceX IPO. That's
Yep.
a fact.
Right,
Like I
right.
can do something
Well,
with that.
at
I can
least
use
at
that as
least with the bag
fertilizer,
of crap, you
you
could
know?
you could do fertilizer exactly. Yep.
Right. But SpaceX IPO, I'm sorry.
Yeah. Yeah.
I'm not touching that with a 10-foot pole.
No.
Nope.
All
Not
right.
happening.
Well,
All
that's
right.
about it for today. Yep. Thanks everyone, and we'll see you next time.
Alrighty.
Yep.
Keep